Markets are up following a report that the U.S. is considering easing Chinese tariffs to boost the market. And that follows a report that China has told local governments to push consumption of cars and home appliances. The result is a sea of green in global markets, which look to close the week at 1 month highs, while safe haven assets continue to decline with treasuries, the yen, and gold all edging lower. But with such a quick snapback, there lurks problems. If you look closely at this chart, you can see the volatility or the sawtoothing that may occur. So be careful. Let's take a look. I'm recording this video midday on Friday, and as of right now, the markets are up strongly across the board. This is the 2-year weekly chart on the spiders, and the current price is 266.72. This was the bottom here. Thus, we've had a recovery all the way up to this level here. Now, before we were talking about a trading range between, say, 260 up to about 280. While we recovered, I was thinking we were going to go sideways, but then we started dropping down to the bottom of that trend line, and there was a possibility, which turned out to be fact, and we had a sell-off down to this level here. So we came down like that. So this recovery is a very strong, sharp V recovery. So let me show you some of the concerns that I have. Now, looking at the MACD here, we have this bottom right there. I like bottoms in the Mac that are much more shallow and developing as they recover, and then the fast line moves through the slow line and on their way up. This type of formation is relatively sharp, and we're still have a difference between the fast line and the slow line. The fast line hasn't come through the slow line, so there is still the possibility of some good volatility with such a sharp recovery. Now we can go back here. We saw this recovery attempting, which failed, and now we have this one here, which is very sharp. So I'm not quite sure if that sharpness is going to hold and if we're going to continue in an upward fashion. I think that's the probability is that we're going to stall out here soon and then head down. And I'd like to see a test. It doesn't really matter to me how far down we go. I'd like to see, say, 1/3 to maybe 1/2 of the way down to this level here. So a test in my mind would give me some confidence. I'd like to see that. And we still haven't moved through the slow line there on the Mac. So I think we still have volatility to come. But only time will tell. Price rate of change looks good with a very sharp rebound. Not unexpected. Relative strength, we're finally popping through that midline or 50. We're at 52.29. So things are improving there. We're getting back to where we were in the normal levels, I'll call, over the last 2 years above that 50 line. So that's good there. Moving into stochastics. Again, this shows a very sharp recovery. Bottom and the fast line moved through. We're still under the 50-year midline, so we're still improving. I like that. Volume on the weekly looks to be okay. And then here's the Williams also showing the recovery. So let's go back to the price chart. Again, a little bit of my concern. Now we are getting back to that trend lines, the 260 to 280. So hopefully we can hold above that 260 and maybe move sideways, but I still would like to see a healthy pullback. Now let's just go to the 6-month daily chart to see what that shows. We're now at the 6-month daily chart on the spiders with the bottom there. Now we had the channel set up between, say, about 260 to somewhere around 280. We had the sell-off there and then the recovery. So that's a pretty sharp V recovery. And we see that there in the MACD, very strong. Into the histogram, we show that the move was very strong up to this level, and then we started to turn over, but we've got the news today that is extending our recovery. moving here into the price rate of change. We also showed a little bit of a top at that point with small consolidation and then another move. So I think we're going to get some of this sawtoothing that occurred here. I do expect that the fast line is going to move through the slow line, and that could be next week, the week after, but that just remains to be seen. Into the RSI, very strong, moving on up to the overbought territory. And stochastics have remained in the overbought territory and extended by this morning's reports. Now, this is the one sign that I have a little bit of concern. Not big, but it's the volume. Volume and breadth of the market has been negative, as you can see here, and that's not good to have in a sharp recovery. So that's one concern that you keep your eyes out for. And then into the Williams, we've been in the overbought territory for some time. I think that's going to exhaust itself, but it may take a week or two or so. Now, moving on up here, the probabilities are that we can continue moving sideways while we have a recovery, sideways through this channel here. But I would like to see a retracement, perhaps about 50% of the level that we've come from here to here, going back 50%. I'd like to see the market come down and successfully test this level, but up at this point here. And if that can happen, then I'll have the confidence to go into the market. So let's just wait for a test of that bottom there. I think we're going to get it, and we'll get it here perhaps in the next few weeks or so. So we'll see. But time will tell, and there's no reason to be impatient. So just wait for that. We need to have a positive test of that level, and that should give us the confidence to go back into the market. So for today, that's Two Dog Charts. Thank you.